This is John Forlines and Nick Lobely in the hallway at Donahue Forlines, and we're finally here with a post-election midterm report, 2022. The reason we waited, obviously, is the Georgia results came in last night.
Yeah.
Did you feel like it was a surprise to you, or sort of a continuation?
So to me, it was closer to a coin flip if you were looking at betting markets or exit polling. And quite frankly, after the election, it didn't matter quite as much because the Senates were going to maintain a majority no matter what, be it a 50-50 split or not. However, the Democrats continued their momentum that they had through the election, which I think, to a lot of people was surprising, right? If you look at sort of typical historical standards for midterm, I think a lot of people expected a red wave, right? And John, I'm interested in your thoughts on, what happened? Why did that not happen?
Well, I mean, you have to look back. Well, let's put it in context. You have to go back to Reagan's, first term, and you have to go back even further to George Bush post the Iraqi war to look at a time where a sitting, newly elected president actually didn't lose seats in total, which is the case in the Senate where they gained actually. And I think most people were incredibly surprised about the strong performance in the House of Representatives. I think to your point that, markets love it when Congress is deadlocked. It's less deadlocked than it was because you don't have these committee assignments where half and half, where nothing gets out of committee. So stuff will get out of committee, it will go to the floor more often, which is when it gets to the floor is when people get embarrassed. So the whole strategy for the Republicans the last, 4 years was don't let anything go to the floor. Mm-hmm. So that strategy is out the window. On the same time, you think about the House of Representatives, not anything is really going to get done. Mm-hmm. And that's probably from an economic standpoint pretty good. Mm-hmm. The other historical point I'd like to raise is there's, you've seen the numbers. The year after a midterm is usually a good year for markets. Even if you look at the dynamic, and we did, if you look at, say, a sitting president who holds the Senate but loses the House, mm-hmm. that's still, a nice 8.5% to 15% gain. Mm-hmm. But the historical rate generally is higher than that for all holds, whether or not he's sitting or just he's second term or whatever.
Yeah. And I think to speak to that, John, even after the midterms, right, it kind of takes some uncertainty off the table. And we saw that, right? Markets sort of rallied after we had more clear results from the elections. As I mentioned before, the runoff not varying quite as much as it might have if it swung the Senate one way or the other. But there's definitely a lot, to be optimistic about. And to me, it was sort of not a referendum on the current White House, but, sort of a referendum on some of the more unelectable Republican candidates and people sort of choosing, legislators in the more typical, maybe a return to more normal politics that we haven't seen.
We could always hope. I mean, one of the things we always say here is, look, we're investment managers who are independent by nature. We want good outcomes and not stupid mistakes done by politicians, right? So that's what we're really looking for. But I think that, if you look at this election in the historical vacuum, you'd say to yourself, November 7th, all the polls, including the exit polls, said inflation and the economy, and then abortion creeped in this year, a social issue. And that seemed to steer a lot of these states that we thought were solidly going to switch. Arizona, Nevada, Georgia, we felt was probably not going to hold for the Democrats. And yet they did. Yep. So I think maybe you're right. It's a combination of unelectable Republican candidates, and hopefully Republicans will get their act together and fix that for the next term. But it's also probably the nation saying, gee, is there a better way to perhaps govern? And who knows how that works in the polling or anything else. The other thing I would say about that is really interesting is that if you look at the Gini coefficient, something we do look at, which is the wealth inequality, you still have the same issues that Trump rode in on in 2016 with a lot of the so-called 1% and 2%ers doing incredibly well the last 2 years, and then a lot of people falling out despite the economic numbers. You see those, some of the plunging unemployment numbers, and you think, well, the economy must be fine, but that's not really the case, is it?
Mm-hmm. Yeah, and I think that's one of the reasons why people expected the Republicans to outperform is if you look at approval ratings of a sitting president, if you look at surveys of economic standards, among the public, it would point to switch over in Congress, right? And you brought up the point of abortion, and I think the Dobbs decision really energized the Democrats and really the middle class, right? If you look at exit polls, it was right up there with inflation, which I think to some might be surprising given all the coverage that inflation has gotten over the past year and what a lot of people were running on.
Yeah, and we still have the view that, look, it's a pandemic caused supply chain inflation. Everybody's. I see now Congress or the Fed's still interested in wage hikes being high, but I think we've long maintained is you still have a worker decline rate in the United States, and so there are still highly educated people getting jobs and getting more money for them, but the rest are falling out of the system, right? Mm-hmm. And so I think the inflation numbers are actually sort of on the wage side are really flawed. If you look particularly since 2008, we don't know if full employment really is it 2%? Well, 2% of what? 2% of people who could get jobs or are qualified to get jobs. In the United States, we have a qualified problem, right? Mm-hmm. There's not enough people who are qualified to take management, engineering, software services jobs. Mm-hmm. So those positions are going to get bid up, and you have to think, okay, is that longer term? My guess is probably until the supply chain and the war stops and all the other stuff.
So we clearly have a lot of issues. So I'll kind of turn to what do you expect from the 118th Congress and I guess the rest of Joe Biden's first term? What would their goals be?
Well, I used to think, okay, well, it's nice to have the Republicans balance out Democrats, but the Republicans have been just as guilty of free spending as the Democrats. And I think that's probably some of it is the backlash you see from the far right wing of the Republicans. And then, of course, the far left wing, and we also talk about this all the time, the far right and the far left get all the headlines, and they push a lot of the emotional pulse in elections and the conversations. So the middle seem to step up here and say, no, we're not having any of that. And can we get something done? So it's going to be interesting to see how much actually does get done. You did take out what I call the Manchin cinema put, right? Which is essentially at the 50-50, if one of those two or both of them dropped out, the Senate Democrats could do anything. Mm-hmm. Well, now they actually can with the tiebreak.
Yeah.
So it's going to be interesting to see how that dynamic plays out and whether or not Bush decides to Biden. I had Bush on my mind this morning. Biden actually carries his agenda forward, which is about a lot of stuff that Republicans care about: infrastructure, border security. Hopefully, immigration. Some of those things are mainstream Republican issues too.
Yeah, and with a slim majority in the House, I think things can get done from a legislative perspective, given some of these issues we do have common ground on. Do you think Biden runs for re-election?
I think there's a lot of positioning right now. I think Trump obviously have to probably announce because he wants hopefully to duck any kind of litigation and things like that, which is a logical thing for him to probably do. And I think Biden does not want to run, but he feels like he has to announce in order to throw that on the table, mm-hmm. To inspire, for example, like the Republicans have been inspired to start thinking about alternatives to Trump. I think the same thing will happen with Biden. I think Biden, heart of hearts, wants Trump not to run. And if he doesn't, I think Biden doesn't want to run himself. So, but he probably feels from a constitutional standpoint, he might want to run if that's the conclusion the Republicans make.
I mentioned earlier that I had the view that it was not a referendum on the White House in its first 2 years of its term. But was it a referendum on Trump? Is it time for the Republicans to move on?
I think the Republicans can move on from, the start kind of real egregious noise that Trump has created, particularly since January 6th last year. They're all ready to move from that. But I think some of the things that Trump raised are still around us. The fact that, even though, he does speak to a large degree to uneducated voters who feel left out. And some of those types of issues will probably still be with us. Anti-corporate, which is kind of ironic given Trump's stature in the corporate, with the corporation, et cetera. But still, that is still something I think that's in the mix and will be the strongest case for how it's going to be difficult for Republicans to advance a more moderate agenda with those dynamics still in place.
Mm-hmm. Yeah, for sure. So how do you think this affects asset markets over the next, in the short term, intermediate term?
Well, all you have to do is look back at every presidential year election and every midterm election, and you see elevated volatility. So we saw that coming, and this year it was accompanied by really super high valuations, and so a lot of air has been taken out of the market. Probably still continues a little bit, but bottom line is everybody's looking for the Fed to figure out where the declination point is. Not just when rates are going to continue at high rates, but when they're going to actually start to move down. And I guess the market's perceiving that's been pushed off into the middle of 2023. I think it's probably before that, because I think the numbers we look at in terms of, I'm not worried about as much inflation, but I'm seeing consumer confidence is down. I'm seeing if you look at the advanced purchasing indexes, those are all down.
Yeah.
So companies are starting to button up. And some of those high-tech jobs that we talked about, they're disappearing because some of the big companies, the tech companies, are thinking, gee, we have too many people at these levels.
Yeah, for sure. And one thing I will say is, a lot of people get caught up in narratives during elections, right? And for the most part, they kind of turn on in their own head, right? This is something we talk about. When Obama got elected, you would have said, he was running a clean clean energy policy campaign, right? And you would have said, but not to buy, energy companies and go away from that. And they actually excelled in that environment, right?
Yeah. And did poorly in Trump's.
Yes,
he was
exactly.
Mr. Coal and oil.
Exactly.
Oil stocks and coal stocks did terrible.
Yeah.
So go figure, right?
And then then Biden gets elected, and a lot of the clean energy stocks start to tank. So. I think it's important not to get too caught up in narratives around elections because, markets don't care about that.
They don't. And I think that's one of the things we kind of hit off at the top is that, look, what's driving markets is interest rates and cash flows of corporations and the economic cycles. Then nothing really changes. What changes is the humans emote about things that really aren't important and make them very important, like elections. And the impact of elections or politicians on the actual economy, which is quite small. It's really the Fed and other central banks. And it's really what corporations decide to do. Are they spending? Are they not spending? And what consumers are doing in the United States, especially. Is the pocketbook still open, or is all that, $1.2 trillion that was subsidy during the pandemic, is that now wearing off to the point where they're not free spending? All that will, I think, be decided early in 2023.
Yeah. So, being that, we see some political risk being taken off the table with this election. How do you feel about the state of the economy? The yield curve is deeply inverted, as inverted as it's been in the past 40 years. What is that signaling to us? And, the real question is, are we in recession? Is there going to be a recession soon? And
well, we've been talking about one now for 18 months, right? So
it would be the most forecasted recession in
history, just like the one that we had in 2020 was not forecasted, but the shortest recession in history.
Yes.
So I think that my guess is you're going to have more of the same. There's going to be a point where the interest rate pain is too much, and you're going to have the bottom temporarily fall out of a lot of purchasing plans, consumer and otherwise, and that will drive rates to probably a stasis and then decline. And that's when I think things will start to turn around. But you have to have some kind of downturn, otherwise central banks aren't going to stop.
Yeah, it feels like since COVID, we kind of been in this, it's sort of shortened economic cycles, right? We've seen a lot of boom and busts over the past, 2 years, right?
Yeah.
Even just looking at plain old simple growth rates, right? Looking at GDP.
And the question is going to be, how much is discounted? We always ask this question: is that big, the big 20% down this year? Is it worse? It's going to be 10% worse, or whatever. The answer is probably all of those things. It might be worse for a very short period of time, like 2020, and then boom, as soon as the rate decision's made, markets will probably improve.
Yeah, and I think that's somewhere where a lot of people are kind of missing the point that a lot has been discounted. Markets fell quite a bit, over the past year. And if you look historically to drawdowns of that type of nature, unless it's a deeper recession like '08, like a tech bubble type situation, it does sort of imply that we've seen at least a good deal of the pain already.
No, I agree. I think if you look at there's two kind of data points I use for tech right now. One is take a look at the number of private equity portfolios which have really been cut in value. They've cut their valuations. Face that for the first time. Remember, even in 2002 and 2009, they didn't do that. They suffered the pain afterwards. But so I think that's a signal to the market that they're willing to accept the fact that the loss has occurred and they're ready to move forward. And the other one is very interesting. A person who knows Uber, the rideshare company, very well, told me that they've adopted a new hire policy, which is if you get hired, let's say you get hired as a software engineer this month, you get X, 100 and something, and then if you're hired 3 months later, it's X minus 10. So they're basically building anti-inflation. They're making it up in deferment and equity.
Yeah.
So I think that is your answer to maybe why a lot of tech salaries went out of control. They're just hiring too many, and they were also continuing to ramp. If they're not ramping, I'm sure Uber's not alone, then that's probably a good signal for inflation there.
Yeah. So that's actually a good segue into technology. We've been technology investors for a while here, and it's something we certainly have a focus on. So it feels like a lot of the companies that when interest rates go up, growth at all costs, things start to matter a little bit more.
Yes.
And I think you started to see some of those bubbles kind of bursting a little bit. Has it cleaned out for the most part, or
I do think
where do we go forward from here? Right,
because
I think we all admit that innovation and technology is the future, and I guess where do we go from here?
I think you have to look at tech in sort of these waves of recent innovation. So the real first tech wave started with the internet back in the late 20th century, and then onward into the first aughts, and then we had the crash. So that was the first big correction. So what came out of that were companies who survived were successful in navigating the internet. Then you had the smartphone in 2007, which is the second big stage, and the whole world exploded in terms of mobility, and all the businesses, cloud, applications, semiconductors exploded off of that. So now we've corrected from that, or had a nice big pullback from that. So the answer is what comes next, and the bottom line is chip technology continues to improve. So my guess is there'll be more and more applications formed and more opportunities for business to become more efficient. Yeah. I was thinking about the potential railroad strike. Think about, is there an industry that's probably better suited to robots than the railroad business, to load cars and to drive trains? Mm-hmm. No, there's probably not. Unlike a car where you're subject to all these other people, you're just subject to a track and hopefully another robot switcher, right?
Yeah.
So I think there's a lot of room for productivity improvement.
Yeah, and you've seen a lot of these companies take a large hit, in the past year. But to your point on the internet, no one was wrong about the internet, right? The internet is a huge aspect of everyone's life here in the 2020s. But there was just a lot of excess built up in the market and needed to get weeded out, right? So we can move forward. And I think that's the process we've been going through.
I definitely think so. I'm not sure it's done yet, but that's the bottom line is there's still no better way than to say if you're a manufacturer or service industry to improve yourself without innovation of some sort. So that's still with us and that'll continue.
Yeah.
Well, we have to get back to work.
Yes.
And thank you for joining us in our Hallside chat about the elections. We'll be back soon with some quarterly webinar information, but also probably we'll do something like this at the end of the year. So if you have questions, submit them to Donahue Forlines. You know where we are, and we're happy to address them.
Thank you.
Thank you.